Hi, I'm Amanda with Creative Solutions Bookkeeping, and today we are going to talk about 4 things to look for in your books before sending your information over to the accountant for taxes. 1, we're going to go to the balance sheet first because I feel like this is an area that gets overlooked a lot. This is the sample company that I'm using, which is a landscaping service. We're going to go to reports over here, and sometimes people's dashboard looks a little bit different depending on how you have yours set up, but it's always in there. Reports, we're going to look at the balance sheet. It's probably going to default to today, which today is January 11th. We're not interested in January 11th. We are interested right now in last year. So we're going to filter this down to last year. You can choose cash or accrual. The difference is dependent on how you are filing your taxes. Almost all taxes get filed on a cash basis. So here is a very basic balance sheet. Yours will look similar. You might have more accounts, you might have less accounts depending on the type of business. One of the first things we want to look for on the balance sheet are positive and negative numbers. They should be positive numbers. Unless you get into equity, they might not be. But one of the red flags to look for is a negative number. So right here, I can see Arizona Department of Revenue payable has a negative $130. Now, this either means that they have been overpaid or prepaid, or there's an error. Most likely there's an error because most likely you file your taxes and you pay it right away. That's the most common scenario. But let's look. It could be a prepayment. If it is a prepayment, it's also not logged right. It should be logged as a prepayment, and it should be an asset until it becomes tied to the actual taxes due. In this case, we are looking at sales tax payment Q1, invoice where it's collecting sales tax, invoice where it's collecting sales tax. This check right here, blade sharpener, looks suspicious to me. That's also the minus $130 we were looking at. Let's look at this a little bit closer. Arizona Tools is the company, blade sharpener $130. Arizona Department of Revenue is incorrect. So before your books are ready to go to the accountant, this would need to be corrected, and this is probably like Tools. This is a sample company, so I don't know what they use. We'll call it a supplies for the purposes of this study. We save and close, and we go back to our balance sheet, and we see that our liability is now at a 0, which is what we expect to see. Okay, Board of Equalization payable, that's probably fine. It probably is payable. A loan payable probably has money owed. Okay, so that's the first thing we're going to look for. Another really important thing to look at is your undeposited funds, because this is where things can get a little bit funny if you're not bringing it in properly. The way QuickBooks likes to work with collecting money is you create an invoice, you send an invoice, someone pays you, you receive against the invoice, and then you make a bank deposit. Okay, and the reason that we do that is that is the flow of how things actually happen. So, undeposited funds, let's just open it up in this sample company. This is money getting deposited. Now I'm going to suggest, because this is a sample company and it's used for education, so there are errors in it quite on purpose so that the student can go in and learn how to fix it. I'm not going to spend a ton of time going in and solving a fake company's problems. But what I am seeing here, and this is something that you can look at for your company, is that it's not zeroing out. And we're 1/1/23 to 12/31/23. And I'm not seeing any zeros, and eventually these should get to zero when it gets deposited. I suppose if it gets very low, that's also okay. But it seems to keep adding up. So I would guess that there is a problem there, unless you know that you're sitting on $2,062.52 in checks that you haven't actually deposited. That's the way to check, right? If this is your number in your accounts receivable and you have those checks or that cash in front of you and you haven't put it in the bank, great, you're good to go. You don't have anything, you've already deposited everything, there's a problem. And we need to investigate that a little bit more. That would be a video for another time, because this is just what to catch on closing out your books. We're going to go back to the profit and loss. So check your undeposited funds. Let's see. I don't think that this company has inventory, but inventory is something that you're going to need to do. If you are counting your inventory, if you have inventory in your products and services in QuickBooks, you're going to want to do a physical inventory count, and you're going to want to make inventory adjustments to your actual on 12/31/2023 or 1/1/2024. If you are not holding your product, you're going to do your inventory count however you do your inventory count, and you're going to need to make a journal entry to adjust to your actual inventory, with the balancing being cost of goods sold. I can show you, they don't have inventory, but this, you would go to journal entry and you'd have to do your difference. So you'd have cost of goods sold. You would need your date to be December 31st, 2023. This is an adjusting journal entry for cost of goods sold. Let's say your difference between your balance sheet inventory and, and your physical inventory is $100. You're going to, and you need to reduce your inventory by $100. You're going to put $100 in cost of goods sold because you've sold that inventory. If you're dealing with something with spoilage, it could be spoilage as well. Its inventory gets a little bit more complicated. This account right here would be inventory, which this sample company does not have, but this would also be $100. Descriptions are always good, and this would be an inventory adjustment to actual. Okay, and you probably have some supporting documents, and that's however you do your inventory, whether it's Excel or whether you pull it from a point of sale system. The next thing you want to do is you want to take a look at equity and just make sure that it makes sense. What you're going to be looking at for equity, and this sample company does not have all of it, it has an open balance equity, which looks funny. The open balance equity is generally not a negative. Open balance equity, personally, I don't like to use it at all. Some people do use it. It's when you first start your QuickBooks and you had a beginning balance in the bank, it would be the open balance from the bank. Typically what you're going to see is you're going to see an owner's equity or an owner's investment. That's money that the owner puts in, and then money that the owner takes out is an owner's draw. You can pull those accounts separately to find out what you have been able to pull from the company and what you've put into the company if you filter it by year. This sample company doesn't have that, so we don't have that as an example to see. Okay, number 2 to get ready, that was all number 1. Number 2 to get ready is you're going to want to reconcile all of your balance sheet accounts. So that means you're going to want to reconcile your checking, your savings, your cash box if you have it, undeposited funds. We already looked at that, but you are going to make sure that that is good as well. Your fixed asset does not necessarily need to be reconciled, but your fixed asset original cost value shouldn't change. So it's always a good idea to just pop this open and see what's going on. And I like to look at all dates. And this is what you should see is just one journal entry where you're adding the original cost. And then the balancing of that journal entry is either going to be, okay, this is one super fun mistake that in this sample company for QuickBooks to fix, right? For somebody to fix. There's the original truck cost, and I would say like, I don't know, 2015 Chevy Silverado. Okay, and then this is not going to be against open balance equity. This is however you paid for it. So if you took out a loan, it's a notes payable. And then if you paid cash for it or a check or whatever, you would put, you know, the bank account, cash, however you paid for it. So let's just say it's a note payable. We already have notes payable right here. That's going to put that balance into the notes payable. Now there's a little bit more to a vehicle purchase, because in this vehicle purchase, you probably paid this amount. That's the value of the vehicle. You have a note payable. You know, this says it's for the same amount, but it's probably actually more if you took out a loan. They probably have wrapped in like tax and registration, and that is part of the loan, but it's not part of the original cost of the truck. So we'll use the automobile expense that they have in there, and that goes on the expense side. Let's say that was $100. That means that the note payable is actually $100 more, and this is the truck loan. Okay, and this is tax and registration. I know that's super low. Wouldn't we love for tax and registration to be $100? That's just for simple math, and that's how that's really going to balance out. Okay, we're not going to save that. But the important thing is here is that you've checked your asset. It only has one transaction because there's no reason for that asset to decrease on the original cost. It does get depreciated, and that's something that you or your accountant will do, and that's a separate line item. Back to the balance sheet. Okay, you're going to reconcile your credit cards, you're going to reconcile any of this stuff in here. Definitely your notes payable. And then I'm going to show you how to do a quick bank reconciliation to do it properly. So if you go up to the gear sign and then you go to reconcile, we're going to say get started. Okay. Checking account, it has a beginning balance. In this case, it's never been reconciled, but it's got a beginning balance of $5,000, and then you're looking at your bank statement. So let's pretend that we didn't reconcile properly at all for 2023. So let's say the ending balance is $12,500, and the bank statement ending date is 1/31/2023. Now you're going to go through your bank account and check off transactions. Now this doesn't have any transactions in 2023, so this is a poor example. All right, so let's say we're doing a December one because there is transactions in here. So I'm going to edit the info, and I'm just going to say that that's for 12/31/2023. Okay. We don't have a bank statement for this sample company, so we can't actually do it. But let's pretend that the beginning balance on your bank statement is $5,000. The ending balance is $7,500. You go through each of the transactions on your bank statement and you check them off. And you're like, okay, that's cleared, that's cleared, that's cleared. when it's done, this should be 0. And ideally, you don't have any transactions left over that didn't reconcile. Okay? You're going to do that also for your credit cards and for your notes payable. Number 3 to get ready for taxes is to gather your source documents. So your source documents that need to go over to your tax accountant are going to be bank statements for the end of the year, so your 12/31 bank statement. Any loan statements. Loan statements sometimes cross over years. Let's say you get your Chevy truck loan statement and it comes out on the 15th of the month. Your accountant's going to want to see the December 15th statement and the January 15th statement because it crosses over that end of the year line. Same thing with any credit card statements. Get your purchase paperwork together for any assets. So it's always a good idea to file all of this stuff. At Creative Solutions Bookkeeping, we use a perpetual data room where we file everything digitally, and we will ask for copies of that purchase paperwork when people make the purchase. We also save it into the QuickBooks Online for easy access to in case of an audit or in case of any questions. Your purchase paperwork, like I explained in that journal entry, is going to show the original cost of whatever it is, and then it's going to also show any trade-ins if it's a vehicle, any cash down payment that you might have paid. So that's all really important information, and that is how the accountant is going to make sure that those things are recorded properly. Now, the better job you do bookkeeping, the less you have to pay your accountant to go in and make any of those kind of higher level adjustments. Credit card statements, I already said, and then payroll documents. They're going to want to see your payroll documents. So you're going to want to go on to whatever payroll service you use. If it's QuickBooks Online, you're going to go into payroll and filings, and they're going to want to see your payroll filings. They might ask to see a payroll journal, but definitely get your 941 filings prepared and any state filings prepared. It's a good process to save those along the way. If you use a payroll service, they're all available online. Creative Solutions Bookkeeping, we do save copies of those tax filings and put them in a payroll folder so that we can easily gather them at tax time. Okay, and then tip number 4 is to review the profit and loss. So I like to do the balance sheet first because you catch some errors right in there, and then we go into the profit and loss. So we're going to go reports, and we're going to do profit and loss. We're going to want to filter this to last year. And it's going to be a cash basis. Okay, so now we've got design income and then discounts given. That's fine. Now what I want to look for first in the sales section is if you are using invoicing through QuickBooks, if you open up your income category, you should see only invoices. And this one is sales receipts. So they're not using invoices, that's fine, but they used a sales receipt. What you should not see are deposits going in as sales, or in this case, design income, revenue, whichever one you're using, because you're probably doubling up. If you're sending out an invoice for $225, you have, at the point where you've sent that out, you have recorded income. Then this is a receipt, okay? So you put in your sales receipt, $225. Then you get a check for $225 that pays that. It shows up in your bank feed as a deposit of $225. QuickBooks might have prompted you to just put it in as sales. You're going to see over here like deposit, and it's going to say $225. Now you've doubled your income, and you're going to get taxed on that. So let's not do that. So you want to check and see if you're doing a point of sale system like Square and you're doing journal entries, then you should only see journal entries in here. You shouldn't see any deposits going in. And then your discounts is probably fine. Then there's landscaping services. Again, you shouldn't have this many. Most businesses are not going to have this many different revenue categories, but we just take a peek, and if anything was a deposit or something, we would want to edit it there. So that's one thing to look at for your sales, to make sure you're not doubling up on your sales. And then you just want to go through and you want to make sure that things make sense. So one of the things to look for, and the reason I'm scrolling all the way down to the bottom, is to look for uncategorized expense, because right away that's something that you're going to want to clean up. And they don't have any uncategorized expenses in here, but they do have miscellaneous, so you might want to just look and see if you have something like this. We just want to see, like, where did it go? Is there a better way that we can categorize it besides miscellaneous? This says open balance, miscellaneous, $250, Hicks Hardware. This is probably an incorrect entry. This is probably a cost of goods sold. They're landscaping, so they probably went to the hardware store. They needed to buy something. This could be, if it's a cost of goods sold, then it's part of selling something to your customer. If it's like something consumable that you use as part of your business, it could be supplies. So I would say supplies, let's pretend that we have a source document that we can go back and check, and we're like, oh, right, this was for, I don't know, batteries. Let's hope not, because that's a lot of money to spend on batteries. All right, we're going to save and close, and we're going to get that out of miscellaneous and just put it somewhere a little bit better. Okay? So same with any of these in here. Check your uncategorized transactions. You shouldn't be seeing any negatives on your profit and loss. They should all be positive numbers. If you do have a negative, it might have been a refund. The only way it really should be a negative, though, is if it's a refund for something from the previous year. Otherwise, it just doesn't make sense. A good one to check is your rent or lease. That's probably a pretty consistent number throughout the year, or maybe you renew your rent or lease in like August, so it changes one time. But you want to make sure there's 12 entries in there. Same with like your telephone, any of these, right, are consistent monthly bills. You want to make sure that you have all 12 entries in there. If you don't, it's time to start investigating why you don't. Most likely it's miscategorized and put somewhere else. So it's always a good idea to just, pop in, open these up, and just see that they make sense. So like this is accounting, legal and professional fees accounting. In this case, they use two different companies. If you use two different companies, great, looks good. Bookkeeper. So this company pays a bookkeeper, and now it's going to crap out on me. They pay a bookkeeper and they pay an accountant. So your bookkeeper is probably consistent. You probably paid the same person. You'd see that in there. Last year, cash. Okay. So once you've confirmed that your data is good, you've done all of your reconciling, what you're going to do is you're going to print to PDF your profit and loss statement in a cash basis, your balance sheet in a cash basis. If you have accounts payable, accounts receivable, you're going to want to show that as well in, and then put all of that together with all of your statements and source documents that you're going to send over to the accountant and send it over. If your accountant has access to your QuickBooks Online, which is totally something you can do in Manage Users. This is a sample company, so let's see if we can do it. There's no users, but you could go over to accountants. Because this isn't a real company, we can't actually add anybody. But right here, you'd have a button in here somewhere that says add. You'd put their first name, their last name, their email. A lot of accounting firms have a standard QuickBooks email, so ask them. Don't just choose your accountant's email that you maybe communicate with. I would ask them if they have an email for their QuickBooks Online. That's because their people are going to log in with that email and username to be able to get in. So if they can get in, they can see all your information right there, and they can pull the profit and loss. You just let them know when your books are closed. And that is your final step. When you have all of that information ready to go, you can close your books. And then if you go into the company settings right in here and you go to advanced, and right here is where you can close your books. Okay? And you're going to put the closing date of the end of the year. And you can do allow changes after a warning or using a password. If you're the only one in your books, go ahead and do after the warning. If you have employees that have to enter certain aspects of your business, choose a password. Then they can't make any changes, because nobody should be making changes into 2023 in 2024 unless the accountant comes back with adjusting journal entries, which they will if you have assets, because you'll be depreciating them. Then you will need the password to enter in those journal entries, and then you're good, you're done. And that's it in the most simplest way possible, how to get ready to close out your books for taxes.